Hi, Mike Jacobson here with the Tune Investments. And today we are going to spend a few minutes asking Sam Khairi a few questions. Just a short little interview. Uh, Sam is another multifamily investor. And so, Sam, can you tell us a little bit about yourself?
Yeah, absolutely. Thank you, Mike. Thanks for having me on. My name is Sam Khairi. I live in the Bay Area, San Francisco Bay Area. My wife and two little boys. Originally from Canada, moved out here about 10 years ago. Loving it out here. A few years ago, we kind of got into real estate investing just by luck and just kind of talking through some of our friends, and really haven't looked back. Yeah, I mean, we've been doing it part-time on the side for a couple of years, and hoping to make it a full-time endeavor here in the near future.
Okay. Well, that's great, Sam. And so, what is it that appeals to you about multifamily as an investment?
Yeah, so I think first and foremost was, just like many other investors, we got into single-family residence when we first started, and it was great to start with, just because the barrier of entry was relatively low for us, especially thinking about getting a property for less than $100,000. To us, it really appealed to us, and it was cash flowing property, and it was great when it was good. Um, but kind of as we went through it, and those the single points of failures really didn't appeal to us after a little while. And we saw that firsthand with one of the properties, and we saw a lot of issues with one property that we had to deal with. And one property equals one tenant, with single family residence. And kind of got to thinking as to what else we could do differently to kind of reduce our risk, but also keep our cash flow and kind of grow our net worth. That's when we kind of got into multifamily and started looking into it, and realized what we were missing. It was just kind of a blessing, to be honest, kind of to find out about the asset class and what it could do. Just scalability, to me, is huge. And if you think about it, you've got one bad tenant, two, even three bad tenants on 100-unit property. I mean, that's relatively manageable compared to if you have one or two bad tenants in a single family home, or let's say even a duplex or quad. I mean, that could
Right.
really wreak havoc on your cash flow, on the property performance overall. So to me, that's the most single important thing that we wanted to, was just kind of reduce our risk overall.
Now, that's a great point, being able to spread your risk out among many different doors instead of just, a couple of multifamily homes. Because like a vacancy on a single house, even in a portfolio of five houses, I mean, that's still a lot of income.
Yeah, no, absolutely. Yeah,
So,
absolutely.
all right. So, what is your investing focus right now?
So this is going to change probably in the in the next week or two, just because of the way the market is. But we're really focusing on any multifamily property that's over 50 units. Initially we were targeting anything over 100. It just becomes more and more difficult to kind of find those good properties. We've changed our criteria a little bit in the past few weeks, a couple months, I would say. Kind of looking at a broader spectrum of looking at smaller properties, anything over 50 units, to be able to get into some of these properties.
Okay. And 50, that is kind of a break point because that's when you start getting your economies of scale. You're able to hire maintenance person. You're able to have a person on site for property management, that type of thing. And so you're able to scale up.
Right,
Well,
absolutely. I mean, yeah, for us it was, yeah, one of the reasons why we chose 100 was, I think that what you just said, Mike, is 100% right. I would actually see that as more closer to 100, maybe 70, 80 units or higher. You actually start really seeing some of the results. But yeah, I mean, even 50 units, I think you can start seeing some of the benefits as well, for sure.
right. And then you're saying that there's more competition when you get over 100 units. So you're able to negotiate a better deal when you have less competition in that 50 to 100 range.
That's the thought, and like I said, that could change any day. But as you can see yourself, I mean, there are a lot of other syndicators, whether new or seasoned. There's a lot of capital out there, and a lot of newer folks that are trying to get into the business itself. So it's definitely created a lot more competition for those that are looking for those bigger deals.
Right.
So staying flexible, I think, is key. Trying to kind of play the markets and make sure you pick up the good deals when they come up.
Okay. And is there one nugget you would like to pass along to our audience?
Yeah, I mean, we always talk about the notion of don't wait to buy real estate, buy real estate and wait. I mean, that's really true. Even looking at ourselves, we kind of talk about talking to my wife this morning. It was we always talk about we should have done this 5 years ago, or we should have done this 3 years ago, but because of technology, because of the available accessibility to everything around, including digital marketing, folks have a lot more capital available. Things are moving a lot faster, in my opinion. So the quote that don't wait to buy real estate, buy real estate and wait. I mean, that could not be more true today. And I'm talking weeks and months. It's no longer years. You cannot wait 6 months because the market has changed. There's new players, properties are changing hands constantly. So you definitely need to keep that in mind. If you're sitting on the sidelines, you got to get in, do your homework, do your due diligence, but definitely get into real estate. I'm a little biased with real estate, but I think that goes along with anything else in the market.
Sure. And that is a great quote. I like it, Sam.
Yeah, absolutely. It'll never get old.
That's right. So, Sam, how can people get in touch with you?
Sure. We have a lot of resources available, especially on our website. The website is called is aftocapital.com. That's AFTO capital.com. And you can also just reach out to me, sam@aftocapital.com. Or I usually throw my cell phone out there too. I do get a lot of text messages and phone calls, but more than welcome to reach me on my cell phone, 415-613-8870. More than happy to talk to anybody about real estate. So please reach out.
Okay, well, thank you, Sam, and thanks for taking the time to be with us today. And there will be a link to sign up for our weekly blog, along with Sam's contact information at the end of this video. So thank you for tuning in with us today, and